everybody, it's Dave. Welcome back to the channel. Thanks for watching as usual. It was a bit of a rough day today for the stock, down over 8% on the day. Personally, I'm actually pretty happy about this. As I mentioned in a previous video, I have been looking to add some more shares. Didn't quite pull the trigger today. We're only at around, I think, high 4.4s. But if we do get a drop to maybe 4.2, definitely going to look to add maybe tomorrow. So I hope you guys are all handling this recent volatility okay. Doesn't seem to be any bad news in particular causing it, just, it's a volatile stock, it comes and goes for sure. Today, I just wanted to take a look at the most recent investor conferences that Rocket Lab has participated in, fast forward to the good parts, and give you what I think are the most important takeaways. Today, it's not actually Peter Beck or Adam. It's actually their investor relations person, Colin, who you might not be as familiar with, but he seems like a smart guy and definitely someone we're going to be getting to know better as time goes on. Probably going to see him cover more of the communications from the company in the future. Before we dive into these conferences, if you do find this content valuable and interesting, I hope you'll consider subscribing if you haven't already. And if you have already subscribed, thanks a lot. You guys are the reason that I keep making videos. With that out of the way, let's dive into Rocket Lab's 3 latest investor conferences. Okay, so before we jump into the actual conferences here, first just a quick clip from the All In conference. Not anyone there from Rocket Lab specifically, but there was a quick comment on them from a big billionaire VC investor named Vinod Khosla. And a lot of people took interest with this. It's just really quick, but nice to see them get a little bit of press. Funny to see him sitting beside Chamath, who said that Rocket Lab was incapable, and he talks about being a big owner in them. But let's take a listen.
Somebody at Avis do Uber? Would somebody at Hilton do Airbnb?
Right.
Would somebody, and Elon speaking next, but somebody at Lockheed Martin do SpaceX or Rocket Lab? We're investors in Rocket Lab, so I like it a little more. They do have a superior strategy, but SpaceX has done a great job.
So not too much of substance there, but obviously nice to see them getting any publicity, especially at a big investor conference like this. A lot of retail investors watching and saying that they do have a good strategy. Nice to see. So now let's dive into a few conferences with Rocket Lab Investor Relations and see if we can pick out any new pieces of information.
Within the medium domain, it's also important to kind of recognize that you do have what I'd say is a kind of wholly owned market with respect to SpaceX and the Falcon 9, and that continues to scale. But as you think about kind of the strategic needs of the market, having customers that compete with the supplier doesn't make a whole lot of sense in terms of kind of the long run strategic picture. And so if you think about where satellite communications providers go 2-3 years from now, once Neutron is operational, that should allow the market to kind of bifurcate between supplying launches from a partner versus a competitor.
So I just thought this clip here was interesting because he's talking about the future market for the Neutron rocket, something a lot of us think a lot about, and will have a big factor on Rocket Lab's future, basically saying that right now the only option in the market is Falcon 9 from SpaceX, which is true, by the way. I do agree with that. They desperately need some competition in there. But that Falcon 9 rocket is currently actually launching some of its competitors, and he's basically saying that doesn't really make sense to have competitors launching another rocket. So when he said this, I was trying to think of who those competitors are and whether they could be good candidates. So first off, OneWeb has been launched in the past by Falcon 9. I do believe their constellation is up and running, but these things always do need to be replenished as satellites fall back out of orbit into Earth. So that could be maybe a potential customer down the line. Obviously, there's been a lot of talk about Kuiper, and the fact that they won't go with SpaceX just goes to show how strongly they feel about not launching with a competitor. And I'm sure there's a lot of others out there. Let me know down below any other SpaceX competitors currently launching on the Falcon 9 rocket.
Moving on, what sort of impacts does reusability have on the launch financial model? And can you discuss how reusability varies across small and medium launch? And with that, how is Electron progressing with its reusability efforts?
Sure. So typical launch cost structure, if you think about 60% of launch being in the first stage, and then kind of the other components of second stage fairing and the like being the remaining value set, within that dynamic, reusability allows you to save that kind of 60% cost structure and continue to use that as a virtue of kind of asset utilization. Typically, kind of medium launch market bogey right now is about 10 reuses. With a Falcon 9, I think is the target to consider. And as we think about where Rocket Lab intends to go, Neutron is hopefully something that slots in at around that 20 reuse on average. Although I think that as we find learnings in the rocket, hopefully we can take that up over time.
So a few things here. First of all, to be fair to SpaceX and try to be objective about this whole thing, yes, there was some statements said originally that they were kind of targeting 10 reuses for Falcon 9. They've blown well past that now on some boosters. I think they just hit their 17th launch on a single booster, if I remember correctly. If not, I'm sure someone will correct me. But yeah, so the 20 number for Electron, definitely good, but not doubling SpaceX or anything like that. The other thing that he mentioned was the 60% number. That was an interesting number to hear in terms of the first stage being like 60% of the cost of the rocket. Now, I'm sure there would be some minor refurbishment and stuff like that. Obviously, having Methalox engines on the first stage of the Neutron rocket, they should burn a bit cleaner and require less refurbishment and that kind of thing. Also, the carbon fiber is, picked for being a very strong material. But, I think some inspection and refurbishment is warranted. Still, that 60% number is one I will make a note of for my models where I try to figure out how much money they're saving for reuse and, projecting future launches. It all goes into how I think about the future revenues and the bottom line being the stock price.
Great. And how does Launchpad availability play into the reusability decision, given multiple Launchpad options? And what does that flexibility provide to the customer and to Rocket Lab?
Sure. So Launchpad availability is really critical. If you think about just looking at the launch manifest and the planned cadence for something like Cape Canaveral, if you miss your launch slot today, it's likely you won't be able to get a launch slot until 2025. And so by virtue of the Virginia pad and kind of the lack of operational competitors that we have on that pad, once Neutron comes to market, we'll be in a really, really good spot to offer, competitive kind of orbit insertion dynamics where by virtue of that Virginia pad relative to the Cape, there's different competitive dynamics that go into, kind of the infrastructure and the orbit insertion, but it's close enough that given the availability of that pad and the launch infrastructure we're building out and also, the proximity that you have to the government customer, it should enable us to, drive future orders on the Neutron.
Just kind of interesting comments on why they chose Virginia. I think most fans of the industry know that obviously Cape Canaveral is the biggest launch complex, busiest launch complex in the world. A lot of companies launch out of there. Very difficult to get a launch slot. I remember a while back there was a ULA rocket having several issues holding things up, and there was like SpaceX Falcon 9s waiting, and they couldn't launch until this ULA, I think it was a Delta 4 or something like that, got off the pad. So very busy complex. I did kind of question Wallops a little bit because it's kind of small and out of the way, but Rocket Lab can be the biggest fish in that pond, the main company, and hopefully that Wallops location will continue to grow and support Rocket Lab in their launch efforts.
Sure. So we continue to build off of a historically good Electron backlog with 2023 and 2024 fully booked. And we continue to overbook slots, just given that customer timing can be an issue. And we have elements of this business that can become, kind of accretive to price, quick turn launches that we want to make sure that we have the ability to service. So if you think about, where it goes from here, it's going to depend, I think, on the interaction of price and demand, as well as the, sort of inflationary environment and interest rate environment. But we feel that it's in a really good spot to continue to ramp the business.
The question there being around Electron demand. Nice to hear that they are fully booked already for next year. So don't have a ton of concerns anymore around them hitting that 20 launch for next year, assuming everything goes okay with their investigation into this most recent anomaly. In the past, I've been most worried about customer demand and readiness. It sounds like from the demand side, at least, they do have enough demand. Now it'll come down to those customers being ready, and overbooking those launch slots should help as well.
All right, great. And maybe taking the two parts that we've talked about, launch and space systems together, how is Rocket Lab thinking about the revenue potential for those two and where they go, versus one another over time?
Sure. So I think the balance of growth opportunities probably sit more in the space systems domain. We're about 2/3 space systems now, 1/3 launch. Neutron coming online will help generate that mix, maybe more towards the launch side of it, but ramping on, what we see as really great space systems opportunities should keep us closer to the mix we have today, although it wouldn't be uncommon, given the kind of lack of, I would say, launch capacity available online to trend towards, maybe more towards a 50-50 split.
It was a little bit odd, kind of contradicting himself a little bit there. At least it sounded like first saying he saw the balance of growth opportunity more on the space system side, which I am very excited about the space systems opportunity. But then also saying potentially they're going to trend more towards 50%, 50-50, whereas right now they're more like, I think just Neutron coming online over the short term will have that big boost for launch, but over the long term, I do expect to see space systems growth continue to outpace.
Okay, got it. That makes sense. And how are you thinking about the diversity of the space systems portfolio? And can you talk a little bit about maybe what end markets you're most excited about?
Sure. So if you think about the bets we've placed today, kind of the key end markets that we've secured on are government mission sets, things that we think that we can do at a significantly lower price point than other competitors. To say, for example, the Rocket Lab lunar mission or the Mars Escapade mission that we're going after. We also think that we're really keen to go after direct to mobile, and we think that the kind of work that we've done around bus design, around assured solar, around some of the other kind of sub payload help can help us get to be in a good spot to seize on that market, and then also the in-space manufacturing market by virtue of our Varda capsule, where not something that we entirely bake our plan on, but can be a helpful growth accretor if you assume that the technology can kind of get cadence and get acceptance by things like large-scale pharmaceuticals.
I thought that part was interesting because he was talking about going after potential direct-to-mobile satellite constellation build-outs. And when I think about direct-to-mobile, I think about AST, Space Mobile. Obviously, they have their Blue Walker satellite, some others. They don't really seem like they need a Rocket Lab to come in and build out some future satellites, but you never know. Maybe they'll build out a larger constellation in the future. There's a few other players there, Link being another one trying to compete with AST. Really curious what companies Rocket Lab would build those direct-to-mobile satellites for. Obviously, Varda kind of hoping that the in-space manufacturing of pharmaceuticals does continue to play out. That could be a big growth driver for the future if Rocket Lab continues to get contracts in that line of business.
Okay, great. And maybe moving on to profitability, we kind of touched on how you see space systems and launch revenue trending over time. Can you maybe touch on how this mix kind of impacts your profitability and where is the biggest opportunity just thinking about gross margin?
Sure. So net, I'd say that within our kind of current margin construct, it's fair to think about space systems as accretive and launch as dilutive within our kind of margin mix. As launch gets better, you should get a little bit closer to that parity, although by virtue of our space systems products, as they scale, will probably continue to be the pacing item in terms of our mix shift. So if you think about what drives or what are kind of upshots within that margin dynamic, we've been pretty clear that the Solero margin is really the kind of the anchor on that business, and that as we get through the legacy backlog that we got when we acquired the Solero asset, that getting to that should allow us to achieve that target margin of 30% adjusted gross profit. Where that goes from here will ultimately depend on customer pricing as well as I think the efficiencies that we're driving through the business. But net, the impacts that we've had of injecting kind of what I'd say is a fresh spurt of capital as well as a kind of a fresh approach to satellite manufacturing within the subcomponent suppliers should allow us to continue to deliver healthy margins over time and more towards that target margin model that we put out for our business.
Just a funny note, the amount of times as I was going through and cutting out and just picking out some highlights, the amount of times I heard him say net, it's so many. Just a funny, I don't know. I just find it like a funny saying, funny statement, if I had a drinking game, taking a drink every time he said net, I'd be probably falling off my chair right now. But anyway, the other thing I thought was interesting is there's been a lot of debate online about whether the space systems line of business is truly profitable yet or not. And he did kind of address that there, saying that space systems is margin accretive, meaning like contributing positive EPS, whereas launch right now is dilutive or costing EPS until they scale up. So he does seem to at least imply there that space systems is already profitable, something that I was kind of believing was the case for quite some time. Nice to get a little bit of confirmation on that, though.
That's helpful. And thinking more about the efficiency piece, is there a volume crossover to reach profitability, and how much does R&D and SG&A rationalization play into it?
Sure. So if you think about the profitability and free cash flow break even, highly dependent on the Neutron investment, which is kind of the primary driver of that burn over the next, we'll call it 6 quarters. Still targeting that 4Q24 launch for Neutron, getting all of our test articles off of the kind of line now and taking a look at them. And I would say we're in the honeymoon phase where everything looks great. There's kind of all these test articles are looking really good off the line, but we won't know until we test it. And so that'll be the governing factor on let's say free cash flow break even. But as we get to what I'd say is kind of the next step, we've put out our target margin model with respect to kind of what we view as the steady state around R&D and SG&A and the gross margin profile of the business. And so getting to that should be achievable, but it depends really on how Neutron's going to factor into it.
Yeah, Neutron is kind of the elephant in the room. It's the big project, the make or break in a lot of ways. The vast majority of their spending for the next 6 quarters. I'll be very excited late 2024 to see how the stock is going. I think we'll have a lot more certainty around the company if Neutron is looking good. It was nice to hear him say that a lot of the components and things they're working on so far are looking good, although of course they do need to be tested. And that second stage tank tested to destruction just recently, from what all reports, performed extremely well.
A similar front on M&A, where as we see a combination of capability gaps as well as supply demand constraints, we're going to spend the dollars to go ahead and buy things that we view as critical to the end customer and critical to our portfolio. But at the end of the day, we're not going to overpay. So whatever we come to market with or whatever we kind of integrate into our portfolio, we want to make sure that it delivers the best value for our shareholders.
Just talking about acquisitions and not being willing to overpay for things. Obviously, I think they got a pretty good deal on those Virgin Orbit assets. Astra, their situation is looking very grim, so who knows? Maybe there's more acquisitions in terms of machinery and stuff like that coming. We'll have to wait and see on that.
When we think about the margin runway and the cash flow, how should we be thinking about that?
Yeah, we'll start with margins and then we'll talk cash. So in terms of margins, as we kind of stated on our call yesterday, we continue to be constructive around our ability to hit both the launch and space systems kind of target model that we laid out at our 2022 Investor Day. Within launch, that still contemplates kind of roughly 45 to 50% adjusted gross margin, adjusting for stock-based compensation. And that contemplates about 24 a year of launches, 50% of those missions recoverable, as well as some production and overhead savings that we flow through. And that's for Electron. So within the Neutron matrix, we continue to view that rocket as similar in terms of kind of that launch target margin potential. But I would articulate that the launch business is one that relies on cadence. And so we feel good about Neutron being able to hit those target margins, although obviously it'll be dependent on our ability to spread the fixed cost base over a higher number of launches. Pivoting to the space systems side of the business, we had originally put out in the 2022 investor deck a 30% adjusted gross margin target by 1Q24, specifically for the Solero asset. And so that was essentially 2 years after close. And I'd say that the commentary that we provided on the call yesterday suggested that we're closer to hitting that target than we had previously thought. So if we go back to 4Q22 earnings, we had kind of flagged some, what I'd say is some mix shift pressures within the Solero business, but fortunately the efficiencies and the investment that we've made in the business are continuing to deliver increasingly better margins, such that we feel good about getting closer to that target that we originally outlined.
So there's a lot there on that one. Basically, it boils down to for launch, cadence is king and will always be king. You need to have, a high cadence, and that will bring the gross margins and net income up. Nice to hear that they are still tracking towards that goal that they laid out in the investor presentation for their launch margins, 45 to 50%. And that's a lot of what I based my own models around. When it comes to space systems, it's really nice to hear that Solero is actually going better than they kind of projected. So things going very well for Solero, pushing the margin profile up to that 30% number on that solar business.
If you go back to, kind of how the genesis of SpaceX has gone from being a Falcon 9 provider to a Starlink provider, the interoperability of those strategies can provide some really healthy feedback dynamics, where if you have cheap internal launch, you can deliver, significantly more cost affordable products in the space systems domain. Now that's assuming that, you're scaling at the levels of capital raising that you can have within that construct. Within our kind of capital reality, we still feel really good about it, and we feel really good about what Neutron is going to enable as the market kind of matures in terms of the constellation dynamics. Those will increasingly work together, where you can put a joint bid of launch plus spacecraft design, end-to-end space company as we term it. It can provide some really kind of helpful knock-on effects, not just in terms of the pricing for the customer, but also managing the capital and managing the risk of the contracts. So keeping those supply chains in-house and vertically integrating is something that we view as works. We view that definitely works. And so as you think about the cash algorithm and bringing it home to kind of where our results and where we view, kind of multi-year outlook, is that we're going to continue to burn cash as we invest in Neutron. The things that, are within that cash envelope, we've stuck to and have been pretty articulate about in terms of the $250 million development wallet required, half of that being CapEx, half OpEx, roughly speaking. And so as we think about the Neutron development cycle, it's going to continue to ramp in earnest this year into next year, with a 4Q24 targeted launch. And what that enables is that once we have a competitive medium launch vehicle offering, hopefully in a continuously supply constrained environment, that'll enable us to have not just the launch contracts that come on the back of that, but hopefully end-to-end space contracts that deliver, those kind of outcomes that we're targeting.
Yeah, so of course, just going on about the benefits of having launch plus the spacecraft manufacturing, the synergies that can provide. One of the companies in the space industry I am interested in does manufacture satellites, MDA. They don't have launch, so that's, I guess, a downside. They wouldn't be able to offer, launch plus manufacturing on some of these contracts, and Rocket Lab will have that benefit. I also thought it was interesting how he mentioned the breakdown of Neutron spending, kind of half R&D, half operating expenses. Every time I'm looking at a quarterly report, quarterly results for Rocket Lab, and seeing how much money they're spending, I'm really trying to figure out, okay, where is the Neutron spending? How much money is Electron currently losing at the launch rate that they are at versus how much money they're spending on Neutron? How much is that being offset by any profits from space systems? So knowing that it's kind of 50-50 R&D and operating expenses should help narrow that down a little bit. I do want to kind of dive into the spreadsheets again in the near future.
Happy with our current portfolio. In terms of kind of the key assets that we've acquired, that enables us to take some really big swings in the market. If you think about the square footage of the facilities that we brought through the Virgin Orbit, the acquisition of select Virgin Orbit assets, 144,000 square feet, in addition to our existing, New Zealand and Long Beach facilities, on top of the other facilities that we have, via M&A, is a really healthy footprint that we view that we can optimize to some pretty healthy opportunities within the, I'd say, the kind of satellite design domain across what I'd say is commercial and government opportunities. So there's a really high influx of these dollars flowing through to these opportunities. The constellations that are in play, we hope to be continue to be involved with.
Just there talking about the benefits of the Virgin Orbit acquisition does make it sound really good. I was a little questioning whether they needed that much space. They've already been expanding a lot lately, but it does sound like they will be able to put that 144,000 square feet to good use for the future growth of space systems as well as, engine production lines.
Both in the current kind of supply demand environment and as well as what we view as the likely 2025 supply demand environment. If you take current demand today, you add in SDA constellations, you add in Kuiper, you add in other big tech potential, the supply demand environment is only going to get more constrained. And especially when you take out if you consider big tech demand x SpaceX, there's billions of dollars have been spent. If you think about the Amazon Kuiper launch contracts across Blue Origin, Orion, and Vulcan, and so within that construct, we feel really good about how Neutron's going to come to market in kind of that end of 24 timeframe. Being able to be scaled to the opportunity as we see it in 2025, 2026, and so on.
I just find it funny how, they're obviously not allowed to talk about working with Amazon in terms of their reaction wheel deal or potentially launching on Kuiper satellites in the future. But just the number of times Rocket Lab communications people, whether it's Peter Beck, Adam Spice, or now Colin, mention Kuiper, I think it's pretty clear they do expect work from that constellation in the future. And, just talking about the other government constellations that'll be coming online, hopefully there'll be lots of work in the future for Neutron as well as the space systems.
If you think about what the hypersonics demand looks like now and how that evolves over the next few years, there will be a mix of both defense and civil demand for the hypersonics testing regime. And that when you get to kind of the mid 2020s, we've seen Defense Prime executive commentary suggest that the bigger opportunity is actually in counter hypersonics, and we're keen to service that as well. So, in terms of what that looks like at maturity, it's tough to define, but we're happy doing, low single-digit numbers of HASTE launches between this year and next. And as we think about, 2024, 2025, operationalizing these hypersonic capabilities is something that might require test regimes, in the tens of launches. But it's still too early to tell kind of, what that is for sure going to look like, especially when you consider the growth adjacency of counter hypersonics.
So good to get the confirmation that we're looking at low single-digit hypersonics launches over the next few years. A lot of them are very secretive and they don't get announced that they're being worked on, so you kind of have to try and guess, okay, how many hypersonic missions are we going to get? Now we know we can expect, I would imagine, 2 to 5, something like that. And then counter hypersonics, which I assume would be, shooting down or countering other nations' hypersonic capabilities, could potentially lead to more work with Electron testing down the line.
Reusability as well is something that we continue to operationalize, where as we think about production potential in 2020 or production potential this year influencing 2024 launch cadence, if that 50% target of kind of recoverability is something that we're going to continue to strive for. But I would say that we'll continue to optimize our schedule and our launch cadence to best value. So if you take, for example, doing a $7.5 million launch that's recoverable versus a $10 million launch that's non-recoverable, the cadence is going to be, what fits into the schedule best, where we're going to prioritize continuing to get the cadence that delivers, healthy margins, with recoverability being something that we continue to operationalize. And so that, we've done a good job so far in our mind of, waterproofing certain parts of the rocket and bringing back components. And as you amortize the cost of those, reusable electrons down, and especially reusable neutrons, the margins only get better and better.
Just thought it was interesting discussing the scheduling concerns versus whether a launch is reusable or not, how much it costs. I guess they can charge more potentially for a non-reusable launch in the future, or maybe just a launch that is, short notice responsive launch under their responsive launch program. So there's a lot more to it, I guess, in terms of figuring out when a launch gets scheduled.
We're not going to come on and, I'd say, get too aspirational on kind of the number of satellites we can do, but more kind of provide shareholders updates when we have, definitized work contracts with healthy line of sight on cash funding.
Yeah, so the question there being like, what kind of capacity, how many satellites could they theoretically build? And just a very Rocket Lab kind of answer. We're not going to come out and brag and just say, oh, we could build this many. We're only going to tell you, oh, we just signed a contract for this much. The cash is real. The company is ready to pay. And I just thought that was an interesting tidbit.
And then maybe another one. What milestones should we be looking for on Neutron later this year into next year?
Yeah, so it's still Frosty hot fire and Frosty tanks. The Frosty tanks is the near term one, and that's the stage 2 cryogenic testing for the upper stage of the Neutron, and then as well as the Archimedes test campaign, which we're working to kind of start near the end of the year. And so essentially, from the outside in, if you see the Frosty tank photos from our stage 2 cryogenic testing, and then you see the hot fire from the Archimedes test campaign, those will be kind of the key drivers and the key milestones for the market to watch.
So we did see the stage 2 testing with the Frosty tanks, which then exploded in a glorious explosion. Looking forward to Archimedes testing. I didn't really realize we're looking at potentially having some test firings the end of this year. I really hope they are on track for that. Definitely keep an eye out for it as kind of the next big milestone to look for.
Got it. And then maybe can we switch gears a little bit here and talk a bit about competition? Can you talk a bit about who Rocket Lab identifies as their kind of biggest competitors in launch and space systems?
Yeah, so starting with launch, if you think about the small launch domain, the real operationalized competitor is Northrop's Minotaur. If you think about what the rest of the small launch market has done, either by a variety of failed launches or issues with separation or issues with capital raising, we're very quickly seeing this market dissipate. And so if we think about, what the real competitors are, it's the rockets that are in service today in the small launch domain. And for us, that's a Northrop Minotaur. And that's, call it roughly 30 to 40 million a launch versus a Electron, which is a 7.5 million ASP. So we feel really good about that competitive matrix. Within the medium launch domain, it's definitely the Neutron versus the Falcon 9. And as we kind of work to get that operationalized, we think that a Methalox engine with the kind of architecture we're targeting versus a typical Keralox engine, even with the kind of benefits of the first mover advantage and benefits of scale, we think Neutron will be a very competitive rocket. The kind of metrics that we're targeting in terms of reuse are about 20 times for a Neutron, and that's comparable to maybe 10-time reuse for a Falcon 9. And so as we kind of, I'd say, operationalize the learnings too of reusability, both from Electron as well as getting Neutron to pad and reusing that'll be something we're going to hope to push the envelope higher over time. That's the same across all launch programs. But right now we feel really good about what that'll bring to market in terms of a competitive offering, especially when you consider the level of kind of big tech demand ex Falcon 9.
Good to hear that they're confident of Neutron's performance versus Falcon 9. I mean, of course they would say that, but yeah, Falcon 9, obviously with that massive heritage of success, the kind of scale already behind it, and Neutron with a big task of growing and scaling up against that. hopefully Neutron will have some benefits being made, 10 plus years later, being designed reusable from the outset, slightly cleaner burning engines perhaps, and all the rest. I do think that 10 reuse number for Falcon 9 has to be thrown out the window now, though they've shown that they can go well beyond that. In terms of the small launch space, I think you now have to officially include Firefly in that competition list with that successful Victus Nox launch. Congratulations to Firefly on that, and let's see how things shape up between Firefly Alpha and Electron.
If you think about, it's really propulsion. If you think about kind of the rocket structure, right, the real challenge that we've seen in the market over the last, I would say, 6 to 12 months is getting a Methalox engine operationalized and affordable. And so if we think about the existing Methalox engines in the market today, it's Raptor and BE4, right? That are truly planning to be operational or close to operational, by virtue of either their test campaigns. And so as you get to what I'd say is commerciality, the focus is going to be for us utilizing the learnings that we've generated by virtue of our Rutherford engine, which, if you think about kind of our core DNA, it's really 3D printing the engines and automating them as much as possible. And we feel that if you think about, those competitors versus ours, the way that the utilization of those engines, kind of notionally works, stressing the engines to the theoretical limit of what they do, that's not what we're targeting. We're going to continue to target an Archimedes engine that is less stressful on the architecture of the propulsion, but enables better reusability. Think of it akin to if you take an aircraft engine apart and you stress the aircraft engine to 90% of capacity every flight, the reusability of that engine is going to be less competitive versus an arguably 50% utilization engine.
Yeah, I've always found it kind of interesting. Again, certainly not an expert here on propulsion and rocket engines, but you see the communications, the tweets from Elon and SpaceX talking about, pushing Raptor even further, pushing to 250 bar, 300 bar, 320 bar chamber pressure, increasing those chamber pressures. Definitely not an expert, but I guess my question is, why do you need that? Why do you need to increase the pressures even further? Is it more fuel efficient somehow, or, what's the benefit there? Would love to hear in the comments below anyone who can shed light on that. But to me, it makes a lot of sense going with this strategy of really not pushing the pressures and straining the engines too far, given you're trying to reuse them as many times as possible.
Where does Rocket Lab see itself 5 to 10 years from now?
Yeah, that's a good question. So if you think about, let's call it like 2030, right?
Yeah.
If you think about the stack of what launch plus space systems domain looks like, you can make the argument that the downstream of broadband is also a software application and social media application. And so if we think about, where that kind of stack of arguably Twitter, SpaceX plus Starlink shakes out, we're going to continue to service the rest of the remaining kind of spend items within the big tech domain. And we think that we can continue to scale to be the supplier of choice within that structure. So if you think about, accessing emerging market demand by virtue of either direct to mobile or broadband, within that construct, we're going to continue to scale to what we view as kind of the best value for the remaining market X that stack.
Interesting to hear him talk again about direct to mobile. These two interviews or conferences are the first time I've heard anyone from Rocket Lab mention direct to mobile, and just talking about broadband more. I used to think, they wouldn't end up going into like a broadband internet provider themselves. Sounds like it's possible. We'll have to see what the future holds for their own space assets and potential constellation. Obviously, that would probably be, 2026 or beyond before they even really get going on looking at that. Now by the way, guys, we're just into only audio, no video. Sorry about that. That's all we have provided.
It continues to be a competitive price environment, but what I would say is that people are willing to pay a premium in order to work with, who they view are really good strategic suppliers. a really kind of great signpost for that kind of dynamic is, the price that Amazon paid across 3 separate launch suppliers and how that compares to, say a Falcon 9. We think that's a really good signpost for where the strategic landscape will go over time and how those dollars will flow through into a Rocket Lab pricing environment.
So again, talking about Amazon and their Kuiper constellation, how they're willing to pay more not to launch with SpaceX, suggesting maybe that's a signpost for the future and other companies will do likewise. Again, maybe OneWeb when they have to relaunch new satellites. They recently did get taken over, but that constellation will endure, I assume. Although, now that they got taken over by a European company, I suppose there is an off chance they would opt for the Ariane, but that would be a very expensive rocket indeed.
And can you comment on the recent announcement with Telesat going to SpaceX? How does that dynamic and decision to go with a rideshare versus a dedicated small launch, can you give more color and how your perspective on how that came about?
Sure. I think that if you think about the capital environment, it's really key for folks to kind of secure what I'd say is the cheapest launch and the most reliable launch in the near term. It's a very competitive environment in the satellite communications domain, so folks are really playing to kind of scale and live to fight another day. And so within that constraint, people will go with what's available, given not just what I'd say is kind of the affordability dynamic, but the availability. If you think about what's happened within the construct of other launch providers in the medium domain, the only one who's launching reliably is SpaceX. And so even though, you might trade what I'd say is kind of strategic considerations for price, as we get to market with a Neutron, we think it'll be at a really great spot where once we prove out our vehicle, we can be a strategic supplier for folks like that.
That was disappointing news that SpaceX did get that contract for the Telesat launches, but he was basically saying there, reading between the lines, Neutron wasn't ready, Falcon 9 is ready, therefore, of course they're going to go with Falcon 9 because of the scheduling factor, really.
At this point, how is the demand for Neutron shaping up? And also, what sort of customers are you targeting initially?
Sure. So if you think about what the comp is between the two vehicles, I think the really key thing to focus in on is Neutron being 13-ton downrange versus a Falcon 9 at roughly 15-ton downrange. So a pretty competitive weight class. I think that if you think about how you underwrite that demand, from a customer order perspective, the hope is that as we get through kind of the 3 key milestones that we've identified, bucketed into frosty tanks and hot fire, that should help drive the order momentum. And as you think about, where that goes from here, what are the key kind of line items that you can underwrite as an investor? So, first and foremost, I think is the opportunity set for Rocket Lab to participate in national security space launch. We've seen some headlines around Lane 1. I'd say that, there's nothing final until Congress is able to get the FY24 budget passed and, kind of make sure that language like that is locked in. But as you focus on that, that's kind of the founding piece of where we think we can participate. But as you think about kind of the commercial sphere, there hopefully should be, good follow-on orders for folks that want to make sure they work with a strategic supplier versus a strategic competitor.
So clearly a big focus will be that national security space launch contract, the Lane 1. I think I might make a dedicated video about that. Obviously a very big deal. Firefly with the medium launch vehicle with Northrop will also be trying to get some contracts within that lane. And then once again, talking about, strategic providers who you are not competing with. The only person launching and competing with these other communications is SpaceX. So, it could be an oblique reference to Kuiper again, or some of these other constellations out there.
And do you think it'll be competitive versus SpaceX?
Yeah, so a really good way to think about it is dedicated launch is how satellites are acquired. I know that the market has, seen the rise of rideshare as a means to take cost out, but at the end of the day, a lot of the satellite design, dynamics that we're seeing are pulling up from that, what I'd say is low LEO, that 300 to 500 kilometer altitude, closer to the higher end of what I'd say is high LEO. things like 1,000 to 1,200 kilometers out. And so within that framework, it becomes a lot more difficult for rideshare to be as competitive from a mission assurance or kind of mission capability perspective. And just from a pricing perspective, the dedicated launch dynamic is, Falcon 9 is typically about a $70 million price tag, and I'd say that the Neutron is targeted at about a $50 million price tag. I'd say that, as launch supply-demand becomes more constrained, we reserve the right to bring price up. But it's something that we think will be a very, very competitive dynamic as the market, starts to realize that it's not just a dollar per kilogram metric. So if you think about the constellations that are announced today, broadband being, Kuiper and Starlink, a couple of government constellations like SDA, Europe's Iris, as well as Japan's government constellation that they've announced at the end of 22. Within that framework, Rocket Lab is going to do a really great job of supplying those folks because we can guarantee the price and schedule that folks deserve.
Great.
Yeah, I wouldn't be surprised if they do raise the price on their Neutron eventually, given that pricing environment and how much demand launch does have, or at least will have in that 2026-ish timeline and going forward. Plus, of course, just inflation. And then just talking about the various constellations that should be coming online. And Rocket Lab obviously can supply a lot of components like those reaction wheels for those constellation operators, if not launch themselves as well. So if you've made it to the end, thanks so much for staying with me. I know it's a long one, but there's a lot of interesting information shared there. I always get so much out of these conferences. If you do want to watch the full videos, you can check out Rocket Lab's investor relations page, and the links will be on there for you. Thanks for watching. If you haven't subscribed already, please consider doing that. I hope you have a great weekend, and I'll see you in the next video. Bye for now.